All right. Hey, everyone. Welcome to today's presentation. Happy Saturday. Great presentation there by Rob and Hubert. As always, what I'm going to talk about today is candlesticks. And so I think if you really want to gain perspective on your trading and be much more accurate with entries and kind of cut the emotions out, that's really what did it for me at this point many years ago. And so what I do is I help traders and investors reach a level of consistent profitability. I'm not there to try to get people to hit home run after home run because that doesn't work, but I'm there to get people to a consistent level of profitability. And so the reason why most people don't make money as traders is because they overcomplicate things. And so today what I'm going to show you is a highly profitable three-pronged trading approach with candlesticks that has not only made me a lot of money over the years, but it's also already allowed hundreds of traders just like you to live a life of financial freedom by reaching this consistent profitability. How many guys in here are looking for consistent profitability, consistent sort of income kind of returns? Anyone interested in that kind of stuff? So that's what I'm going to be showing you guys here today. So, the other thing is, and I'm not trying to, sell something, a ridiculous sort of idea, but you can actually do this from anywhere. It doesn't matter whether you're in a beachside hotel room in Hawaii or, slope side in the Alps. You really can do this from anywhere the way I'm going to show you guys. Okay, so again, everything I'm about to show you here today is 100% true. It's 100% accurate. I have, too much reputation risk here to show you something that doesn't work. I stand 100% behind this. So, that kind of a lifestyle, being able to do this from anywhere, is very realistic. And the reality is that financial freedom is what many traders aspire to, and generating that more consistent income, right? So my three-pronged trading approaches allow me to live a wonderful lifestyle where I spend part of the year in Florida and the other part in Switzerland, where I'm actually at right now. So, success as a trader really isn't that difficult, and I know that with the approach I'm going to show you guys today, I know that everyone can do that. So that's just a little bit of an introduction to what we're going to do here today. Just a couple of words on me in case you haven't heard of me before. I have been very fortunate throughout my career. I've worked both on the buy side and on the sell side, places like JP Morgan and so on and so forth. And what that's allowed me to do is see different markets, anything from fixed income to equities and futures and other asset classes, including alternative assets, alternative investments. But it's also allowed me to work with some of the best traders and investors in the world. And that's really given me great perspective on what works and what doesn't work. And so what I'm going to show you guys today is something that absolutely works, and we're using it every single day. And now I'm very fortunate to be able to share that with my clients, the broader audience such as yourself. So let's get started here. I think it's really important to keep things simple when it comes to trading and investing. A lot of people make it too complicated, like I said before in the introduction. And the way they make it too complicated is by looking at too many conflicting data points, right? How many in here have done that before? You're looking at, there's so much stuff out there, you don't really know where to start. So what I'm going to show you guys here today is exactly how we can weed out through all that information and cut out all that noise and really start to generate that income. So we need to be able to eliminate that noise, and the more straightforward your process is, the easier it's going to be for you to be able to stick with it. So the very best professional traders and private traders that I know and I've worked with in my career have a very simple but a repeatable process, right? So the thing about all this is that the best traders and investors actually don't have thousands of different strategies. They only focus on like maybe one or two types of strategies, one or two types of setups, but they're really good at that, right? So if the very best traders only focus on like one or two types of strategies or setups or whatever the word is you want to use for that, then why do many private investors think they have to become a jack of all trades when the pros don't even do that? Just think about that. So the key to success here and to generate that stream of income and the capital gains is to become an absolute expert at one or two types of setups, and then you look for those across, say, the universe of stocks or indices, futures, or other asset classes like currencies that if you choose to do so. Does that make sense? So that's what we're going to show you guys today. So like I said before, the professional traders have a simple but repeatable process. And so I'm going to show you guys our highly effective and repeatable three-pronged trading process that revolves around candlesticks. And so everyone can do this approach. There's no doubt about it. In fact, I'm going to make a big claim here today, and that is that I think by the time we're done here, over the next 35, 40 minutes, I think this literally can have changed the way that you look at financial markets. I literally think over the next 35, 40 minutes or so, this will change the way you look at financial markets. I've seen so many people come away with that, so I'm going to make that claim once again. Okay, so let's get started. The agenda here today is I'm going to show you why identifying investor mood or emotions is critical to success as a trader and investors, and I'm going to show you how to consistently find these highest probability buy points at any given point for stocks in these commodities and currencies, and then we'll tie all this together. I'm going to show you this beautiful blueprint to this amazing three-pronged trading process. And as a bonus, I'm going to show you guys how we find these opportunities using a proprietary indicator that we've now been using it for about 7 or 8 years now. So that's that. So let's talk about candlesticks a little bit. Who in here is familiar with candlesticks? Are you guys using candlesticks? Yes, no, maybe? What's sort of the consensus here? If you are using, type in yes. No, yes, okay. If you are using it, great. I think you're going to have an entirely different outlook on how this works. If you haven't, will literally change your way you look at the markets, okay? Either way, this is massive news what we're going to talk about today, okay? So the reality about candlesticks is there's basically too many candlesticks patterns out there to learn them all, right? They have these funny names, and I think it confuses a lot of people. So we're going to really simplify this, but also dramatically increase the accuracy by using this approach. So as shocking as this may sound, I just like to use the most profitable ones, right? So you want to focus on the ones that work. Just like most things in the markets, only a few things actually work. So we're only be look for a few candlestick patterns that actually work, because the rest honestly is noise, right? So let's look at the basics of a candlestick pattern. Now, what I'll say here before we get started looking at the charts, what we're going to be focusing on here for today's presentation purposes is a daily time frame, okay? But this does work in any time frame. I'm going to show you guys time frames like intraday and longer term stuff. So you'll see this works in any time frame. But for the most of the examples, we're going to show you that's the daily time frame, so we have some sort of uniformity across the examples. Sound good? Okay. So let's go to the basics of a candlestick. So you can see there is essentially we can either have an up day or a down day, right? And by the way, it works in any asset class. So again, we're going to just focus on stocks today for the presentation purpose, but I'll show you guys examples of how this works in other asset classes as well today and in different asset classes. But you can have either an up day or a down day. So if you have a down day, it would look something like this candle here that I'm circling with the dark or black body. You can see there's an open here. So that's the open of the trading day, and that's the close of the trading day. But the intraday range, as you can see, extended all the way up here and down here. And then, of course, the inverse or the opposite of that would be an up day. You have an open here on the day, or again, on whatever the time frame is, and then it closes up here. But again, an intraday range that extends above and below this range. So what this gives you is this sort of 4-point relationship between the daily, or whatever the bar is, high, low, open, and close, right? And so the close is by far the most important thing here. So let's have a look at this. The great thing about candlesticks is they're very visual. And there's many academic studies out there that tell us that most people, they say 60% of people have an easier time learning stuff or understanding stuff by looking at them through a series of pictures, right? I will tell you by my own empirical studies we've done, I think that number is closer to 70 or 80 or 85% almost, depending on what the crowd is. So for most of you guys that are traders or investors, that number is probably closer to 75 to 85%. And that's great news because candles are very visual. So the benefits of the candle are as follows. Obviously, as you'll see in just a minute, they're much more visual than bar or line charts. And they will give you a clear visual representation of what's happening on the chart. And most importantly, and this is one of the most important things I'm going to say throughout the presentation today, what the candlesticks do, the way we look at them, is they're going to be displaying price action, yes, of course, but they're going to be giving us a read into investor sentiment and investor mood. Okay, if you can consistently find what investor mood is like are they greedy, are they fearful, the investor emotions, you have a huge leg up on the vast majority of traders out there, and you can make massive amount of money like this. So let's have a look at all this. Besides the fact that these candlesticks just work, the formations are very easy to spot once you've trained your eyes just a little bit. It's all about decision making without emotions. Who likes to be able to cut the emotions out of the trading? Yes or no? And that's exactly what candlesticks are going to do. You can see in just a minute how there's an exact point where we can define our risk without emotions. There's literally no reason to second guess yourself. You have very clear stops and even profit targets. The way we're going to do this. And so the great thing about this is, again, it's a defined risk. And so the reason I chose the picture of this person on this big cliff here is because, as you can see, he or she has some very clearly defined risk, right? I mean, her risk goes from 0 to 100% right about here. And it's the same exact thing with these candles where we can use, so you can know exactly where you need to get out and also where to take your profits. So let's look at a couple types of candlesticks. Again, we're going to make this much, much simpler than what people trying to teach out there, because the reality is only a few of these candlestick patterns are actually worth learning and actually show up often enough, and are profitable to actually make sense to spend time on. So here we have something called a hammer candle. And again, you can see there's like 4 different types by various textbooks. I'm going to tell you, scratch all that. Let's only look at number 1, which is the only candle break that really matters. So let's assume, again, this was 1 day worth of price action. Okay, this is 1 day. Again, this could be a 5-minute bar, and it could be whatever asset class you want. But again, to kind of stay uniform, we're going to make it, this is a daily chart right now, and it's a stock for right now. We can show you other examples later. But let's assume this is stock, and for the past, let's say, few days, maybe for the past few weeks even, this stock was dropping, right? And so what happened is the bears have been in control, and once they came to this day, you can see they opened the trading day here, but the bears were so bearish, I guess, that they wanted to push the market lower one more time after having already been in charge for the past few days or weeks. But something changed here, and all of a sudden the stock market rallied back, or this stock, let's say specifically, so much so that it actually ended up closing at the very upper end of its daily trading range. Now, there's 2 ways of looking at this. You can either say, what I like to call sort of the financial TV way of looking at it is, hey, we're off the lows, Joe. Back to you, which is not incorrect, right? Certainly we're trading off the lows, but it's completely underrepresenting what's actually taking place. Because what's actually taking place is that here, the sellers ran out of steam. So the maximum point of bearishness took place down here, right? So the sellers got completely exhausted. And what's the only thing that can happen if the sellers get exhausted? Can anyone tell me that? If there's no more sellers left, if the last of the bulls sold their positions, what is the only thing by definition that can happen? Right. The stock has to rise or at least go sideways. Right. So that's what we're looking for. We're going to consistently, I'm going to show you a way to consistently find these maximum point of bearishness and bullishness. Let's look at another example here, looking at something called an engulfing candle. And again, the names of these candles aren't really that important. In this case, the name actually makes sense because it's talking about an engulfing candle. But let's give you a bearish example so you guys can see that this works both ways. Of course, candlesticks can be used to trade both bullish and bearish scenarios. I'm going to show you guys a ton of examples here, including a real-time chart and one trade idea it's actually setting up right now that you might be able to look at as early as Monday. So that's all coming up here in just a bit. But let's assume here we had, again, this is stock, and with the stock had been rising, let's say, for the past few days or weeks, and we come into this day. And so the stock closed here the previous day, but then it opens up here. We're at the top of this big dark candle, right? So the stock gapped higher one more time. The bulls were really, really pushing hard to push the stock higher, but something happened and the stock sharply reversed lower, so much so that by the day's end, right, it actually fully engulfed this previous day's candle, hence the engulfing candle name. So again, what happened here? What happened up here? Can anyone tell me what happened up here? This was the point of maximum what? The maximum bullishness or the maximum bearishness? Right? The maximum bullishness. Because the last of the bears were basically sucked into buying the stock, right? Or at least covering their shorts. And so when there's no more buying pressure left, the only thing that can happen is that the stock has to go lower or at least sideways. And the odds are very high that it ultimately goes lower, right? So let's look at a few examples here. What we're going to do is we're going to look at a few examples, and then I'm going to show you guys this with a lot of context and some real-time and a lot of real-time examples as well. And I'll be asking you guys shortly to give me your tickers as well. So this is the S&P 500. I'm going to show you guys. I'm going to blow the chart up in just a minute so you can see it more closely. We'll be looking at what's called a strong sell-off. We're going to call it a waterfall sell-off just to add some visual effects here. And it's followed by exhaustion selling, ultimately a strong bullish reversal, which I'm going to show you how we can pinpoint that. and then bullish continuation buying. So let's look at the chart a little bit more closely. Again, this is the S&P 500, as you can see, and what we're looking at here is this strong sell-off here. And at some point in this strong sell-off, you can see there's 2 days in a row where these long exhaustion candles took place. You guys can see that, right? And what does that tell us? Just like I showed you before in those examples, that's when the point of maximum bearishness was reached. The sellers were basically impotent, for the lack of a better term. There's no more sellers left. And it happened for 2 days in a row, right? The bears tried to push the market lower. It bounced right back. Happened again the next day, and then boom, strong follow-through buying. And so the follow-through buying day is really the most important day. And that's what I'm going to teach you guys, how to find this stuff consistently so you can take the other side of human emotions. I'm going to show you guys how you can find that this is a buying spot and not a time to freak out. And so you're taking the completely other side of what the street is doing. That's the kind of stuff that I learned on Wall Street and what I'm applying now. What we're applying in our trading, of course, as well now. So that's the S&P. Let's look at another example. I'm going to go straight to the chart. What we're looking at here is an index. It's the KBW Bank Index, which is BKX's ticker symbol. In any case, I think it's an important index to actually watch if you would like to put that on your watch lists. But you can see here a strong sell-off, right? And what you can see here is ultimately the market tried to push lower. It tried to push below those lows here from this point in time here. This was the August period of that year. And you can see the bears tried very hard to push this lower and below those lows. But what happened here? Can anyone tell me what happened here? What happened? Did we have seller exhaustion or buyer exhaustion, right? You can see the bears tried very, very hard to push this market lower, but they couldn't keep it down there. It's not so much that the bulls came in, it's that there's no more bears left, right? There's a big difference there. I see a lot of comments. It's not so much that there's bulls, it's that there's no more bears left, right? The sellers got completely exhausted and they sort of puked their positions, for lack of a better term. And what happened the next day is follow through buying, and as you can see, the rest is history, right? How about another example? Let's have a look at the GLD ETF. This, of course, represents the price of gold. Some of you might be familiar with this ETF. And you can see here a nice uptrend over time, and then the market kind of topped out. And on this day here, you can see the bulls tried very hard to push the market higher once again. You can see they tried to push the market up here, presumably, right? But what happened? What happened here? The bulls completely capitulated. They tried really hard to rally the market. It quickly dropped, so much so that it fully engulfed the previous few days of price action, right? Follow through selling the next day, and boom, off to the race. And I'm going to show you guys live examples here in just a minute so you can see I'm not cherry picking. This is absolutely works all the time. So stay tuned for that. Just coming up in just a minute or two. So again, I want you to learn how to look at candlesticks through the lens of investor psychology, okay? Because candlesticks, better than anything else I know, I've been doing this for 21 years professionally, and I don't know anything that tells us better what the investor emotions is from a trading perspective, okay? And if you can take the opposite, if you can see that the bulls here got exhausted, and that's the time to do the opposite, you have a huge edge over the rest of the market participants. So I want to skip this example in the interest of time. I would prefer to show you some more real-time ones, but write this down. This is the three-step process to the trade. Okay, we're going to go through the real examples here, the real-time examples in just a few minutes. Maybe take a picture of the slide if you want, whatever works for you with your phone. But this is the three-step process to the trade. So number one, you need to look at the broad market structure. Okay, what does that mean? That doesn't mean you have to become an economist or start getting a PhD in whatever finance you think is needed. No, you need to have a basic idea of what's going on. Are we in a bullish market, a bearish market? Are we in the early stage of an economic expansion, late stage, what are interest rates? There's really, honestly, basic stuff. And then based on that, you look for stocks that are or whatever assets you're looking at that are either trending higher or lower given that environment. And thirdly, and this is most importantly, you're looking for these strong bullish and bearish reversals, exactly what I just showed you. I'm about to show you a ton of examples so you can start using this as early as Monday, okay? Because I want you guys to be ready and think about this and learn over the weekend and go ahead and really start kicking butt on Monday. So you can actually reverse engineer this process, and didn't want to point this out, but you can actually reverse engineer the process. So forget step 1 and 2. If you find a bullish and bearish reversal, just make sure it kind of fits into the broader market structure. Is the market going higher or lower? If yes, good enough to do the trade. Right. So let me show you guys a little bit more of how this works. So here is the S&P 500, and I just showed you this chart before actually, except here we are now applying the 3-step process. Okay, so this is the same chart I showed you before of the S&P 500, except here we're applying the 3-step process. Step 1, what's the broad market structure here? It's bullish, right? Step number 2, that strong bullish reversal I showed you before with the candlesticks, that's this point in time here, right? So when this happened at this point in time, we got a lot of phone calls. I remember my phone was going off the hook. I received text messages and Skypes and all sorts of crazy stuff from our clients around the world asking us, Serge, is it time to sell? What's going on? I said, listen, guys, we're about to test a big level of support. The broad market structure is still bullish. We're about to make a major bullish reversal. Let's give it some more time. Sure enough, by the end of that week, we had a very strong bullish reversal. We gave everyone the green light to go ahead and buy. And sure enough, it was off to the races, right? And I'm not saying this to kind of pat myself on the back. I'm showing you this because you don't need a magical unicorn type of scenario to make money in the market. It's very repeatable if you just know what to look for. Or how about in this example here in the KBW Bank Index that we just looked at before, right? Remember the banking index? Well, at this point in time here before, that's what I showed you before. Right? So again, let's apply our very simple step 1, 2, 3 process. Step number 1, the broad market structure here was such that at this point in time, the Fed was about to raise interest rates. Okay, and the market was anticipating it. So when it came into this major multi-year era of technical support, and it gave us this really strong bullish reversal, what do you think it was time to do? It was time to buy the banks, right? And so this simple 3-step process guys made us so much money and our clients so much money that I really want you guys to learn this here and start applying it on Monday. Now, I'm going to teach you guys something right now that took me 11 years to learn, okay? And we're going to go through it through the lens of don't do this, okay? What does that mean? Don't do what? What a lot of people do is they only focus on like 3 or 4 stocks or like one index future or one like one currency pairs or like one commodity like gold or something. I'm telling you that is a very low probability way of making money in the markets over time, okay? And here's why. Because empirically speaking, and this is not my own rationalization, these are facts, truly high probability signals are only ever going to show up every so often in any given stock, index, currency, or commodity, right? Think about this. Why do you think hedge funds are set up the way they are? A hedge fund, by definition, if they're set up in the traditional way, can either buy or sell any asset class they wish, more or less, right? And there's a reason for that, because they know that there's not going to be an amazing buying opportunity in Apple stock every single day, week, month, or year. It just won't be. But they can find a super high probability, let's say bullish or bearish reversal, for lack of a better term, anywhere. Right? In the entire stock market somewhere, or maybe somewhere in a commodity market. So that's why this specific way here of only looking at a couple stocks or so is not a good way of doing this. Okay? So to me, that is a low probability strategy to make money. You need to look at it the other way around. You need to look at it through the lens of the world as your oyster. Again, that means that you need to have a high probability strategy like the bullish bearish reversal, and I'll show you guys a ton of examples in just a minute now, okay? And then you look for that signal, that pattern, to be repeating itself across, let's say, the universe of large cap stocks, mid cap stocks, small cap stocks, indices, currencies, commodity, whatever fits your style, but it works in any asset class and it works in any time frame, right? So a quick recap of the strong bullish and bearish reversal. Again, just to kind of make sure we're on track here. The strong bullish reversal is where sellers get exhausted. The strong bearish reversal is where buyers get exhausted. I promise you, if you can start thinking about the market in this way, because that's what the pros do, your probability for making money goes from 50-50 to like 85 overnight. We've seen this over and over and over again with people who we teach this to. So what you need, though, is you need something called price confirmation. This is what most people don't do. You need price confirmation, which is to say that once you see seller exhaustion, you still need a confirmation buying day. Or when the buyers get exhausted, you still need a confirmation selling day. And I'll show you guys exactly what this looks like. So to me, I have never really been a big fan of indicators, because when I used to work on Wall Street, we had guys come in almost, I don't know, probably once a week to show us their magical indicators. But I would say probably none of them really actually worked over time. So at this point, I think it's 7 or 8 years ago, I developed something, and because I've been doing this trading process forever, and so I told my buddy, I was like, listen, I'm a little reluctant, but I was wondering if you might be able to program this one specific thing for me. So he came back a couple of weeks later, and we tinkered with it for another 3-4 years, or I think 4.5 years actually, and the result is what we now have is a super high probably straightforward buy and sell signals in the charts with exactly the candlestick patterns that I showed you and more. Okay, it's absolutely beautiful. So here's what it looks like. And I'll show you guys a lot of real-time examples in just a minute so you can see that I'm not cherry picking. So here, for example, is shares of Tesla. Okay, and you can see these red arrows. This is literally what it prints on the this is literally what it prints on the charts. And you can see the stock after the signals dropped about almost 19%, right? Or how about here in this stock, you can see the red arrow prints the stock drops about almost 13%. Then there's a green arrow and the stock rallies like 15%. There's a red arrow and then the stock drops another 15%. Okay, so you can see these arrows, these signals are very, very simple on the chart, and it goes by these, what it detects investor emotions, and it basically takes the other side of it, right? And that's why it's such a high probability signal. Or here, for example, the red arrow, you can see the red arrow prints, follow through selling, boom, the stock drops 7%, right? So it looks for a very specific pattern, and no, it doesn't just only look for a candlestick thing. It's more involved than that, trust, because just looking at a candle, that's going to be a struggle over time, okay? So, or how about here, for example, you can see shares of IMAX. You can see actually a double buy signal, and the stock quickly rallied 12%. So let me show you guys how this works. We're here, for example, in Apple. I think a lot of you probably have heard of shares of Apple. You can see green arrow here, and the stock rallies 7-8% very quickly. Right? And I'll show you guys a ton more examples in a minute. So after a while of using this indicator, I thought to myself, you know what, I don't consider myself lazy, but humans are kind of wired to be lazy. So I asked my buddy, you know, if he might be able to program this into a scanner, so I get these ideas, these actionable trade signals, literally hand delivered to me on a daily basis. And so he did. This actually went very quickly. I don't think he worked on this for more than a couple of weeks. And so we now have a way to scan for these things very, very simply, and it just gives me the super high probability setup. So let me show you guys how this looks like, and then we're going to go in and ask you guys to give us some real-time tickers as well, so you guys can see that I'm absolutely not cherry-picking this. These are showing up in real time every single day. Okay, so here's the thing about the scanner. It really, really dramatically reduces the idea generation time. Like for me, for example, I used to spend at least 2 hours a day searching for trade ideas. Does anyone like the idea of having to spend less time looking for trades? Yes, no? So now I wrote here less than 20 minutes. Honestly, I don't think I spend more than, I would be lying if I told you I spend more than 10 minutes. It may be less than 10 minutes, maybe like 7 minutes or something like that, looking for ideas. It's that quick. So I'll show you guys how this works. And it's because of the beta reversal scanner. So this is what it looks like. We have these 4 scans, and I'll show you guys the real one here, the actual live one here in just a second. And you can see all we have to do is look for, there's 2 types of Bullish scanners and 2 types of Bearish scanners. And it literally hand delivers them to us, so we can go ahead and execute. All we do is you click on the ticker, and boom, we see if there's an actionable. So let me ask you guys to give me some tickers. What stocks would you guys like to look at, so I can show you right now if there's actionable signals or what there has been recently? Okay, someone wants to look at Goldman Sachs. Here, let me type in Goldman Sachs, so you guys can see I'm absolutely not cherry picking. These are just tickers that people are giving me. This one here is from Jim. Okay, here is shares of Goldman Sachs. Let me just make this a little bit larger. All right, Goldman Sachs. Look at this down arrow, sell signal, and what happens is stock goes lower. Here we have an arrow, but no follow-through selling, so it's an invalid signal. How about here? Green arrow, what happens is stock goes higher. Red arrow, the stock goes lower. How about here? Red arrow, the stock goes lower, right? So you guys can see that's just Goldman Sachs. Okay, let's just go through the banks. Some more people are asking for other banking stocks. Let's do the banks first quickly. This is Bank of America. Green arrow, what happens? The stock rallies. Then here we have no follow through buying or selling, so those are invalid. But just over the past couple of weeks, sell signal here, buy signal here. Okay, and we're still waiting for this one to finish setting up. It hasn't yet finished setting up yet. Yeah. Let's see. How about? I'm just trying to go for the stocks that you guys actually know. Sure. Let's say BA, which is Boeing. Sure. Just right now, we just had one a couple, I don't know, a few days ago here. This is the most recent one, BA. See this? This is for you, Craig. Boom, the stock goes lower, right? How about, I'm just trying to go to the names you guys know. Oh, sure, Tesla. Yep, we had beautiful arrows just a few weeks ago. See these arrows? And what happened to the stock? Boom, stock. Again, I'm not cherry picking, guys. These are just tickers you guys are giving me. Tesla, which came from Al Glover, right? You can see that Al, right? I'm not cherry picking. How about, let's see, MU is another one that people like. Micron Technology. Let me see here. These are the most recent signals here. This is a live chart, or the most recent chart. This is the buy signal here, green arrow. Okay. Then here, one with very little follow through buying, but here one sell signal with a red arrow. Right? Okay. Sounds good. Let me see. I'm just trying to go through some of the signals you guys want. Sure, let's get gold, or I guess gold minus we can look at. Does that work? Okay, it's just like a futures contract. Some people asking futures, it's going to be the same thing. So here you can see a down arrow, and there was no follow through buying here on the green arrow, on the up arrow, so that's why it's invalid. But here, sell signal, boom, falls. Buy signal, rally, and then buy signal, and then ultimately GDX here rallied over time. Okay. All right. Okay. Let's see. Let's see. Something like Adobe. Sure, here's one in Adobe. This was just I don't know, a couple of months ago. Green arrow here. Boom, the stock rallies. Green arrow here. Boom, the stock rallies. See that? How about, let's see here. Oh, yeah, some of the techie stocks we can look at, like, for example, some of the, like, oil names. I see a lot of guys asking for oil names. So here is, for example, Valero Energy. This is from Lisa. Let me quickly take this here. You can see the buy signal here, stock rallies, sell signal here just a couple of weeks ago. Boom, the stock falters. Okay. How about, yes, this absolutely works with options. All you have to do is once you see the signal, Harold, once you see the signal in the stock, all you have to do is then trade an option. But I usually just buy an at the money put or call. Okay, and I'll go through the follow through buying and selling more in just a minute. Okay, just give me a couple more minutes. The arrow appears at the beginning of the trading day. Okay, and this works for intraday as well, by the way. Okay. Let me see. How about Google? Anyone care for Google? Yeah. Sure. Let me just give you guys. That chart's not coming up. 1 second. We actually just had. Okay, I'm gonna get this in action. I'm gonna give you guys an actionable trade right now. Okay, this is one in Google that is setting up right now. Okay, you guys want to see that? This is one in Google that's setting up right now. We have confirmation selling. Okay, we have a qualified sell set up in Google right now. You wait until the day's candle is over, Bernard. Okay, from the indicator. Yeah. Okay. Now, let me see. You guys are asking a lot of awesome questions. What a great crowd today, Jeanette. So good. Amazon as well, if you guys care. Let me show you this. Here is Amazon. Here's the past few signals. Let me just show you quickly. Here, let me just take this so you can see it better. Amazon buy signal here on the 24th of May. What happened? You tell me, but the stock to me looks like it went higher. And we now have a confirmed sell signal on Amazon for a trade. You guys see that? And so all we do, let me show you guys the scanner here so you guys can see that I'm not making this up. So the scanners are right here. These are the 4 scans. There are 2 bullish scans and 2 bearish scans, right? So for example here, if I'm looking for the bearish setups, like for example, if I put in Amazon, this is why I just came across Amazon. Okay, all I do is I click on either Google or Amazon, whatever these stocks are, and they just show up over here. You guys see that? That's all we're doing. right? We're just clicking through these and looking if there's an opportunity. And we only look for the big names that we know. We're not looking for stocks, some esoteric small stocks that we don't know. And again, this works intraday as well, and it works in all the time frames. Let's see here. Let me quickly just show you guys this. So, okay, so let me just quickly go through a couple things, and I'm going to show you guys the indicator a little bit more, because I'm getting a lot of indicator-specific questions. And I want to go through the follow-through buying and thing situation as well. Oh, let's do one currency example. Let me just quickly, like my favorite currency pair is dollar Swiss. So like here's a currency pair, for example. We had a buy signal here in April, and then dollar Swiss rallied like crazy. We had a buy signal here, but no follow-through buying. There was no buying pressure after the candle, so it was not a valid signal. Okay? Excellent. Okay, so let me just kind of go through this real quick. So the candles are going to show you investor footprints and emotions. And we can take a lot more questions. We're going to look at a lot more real-time actionable trade setups right now in just a couple of minutes. What you need to have, though, is a straightforward and repeatable process, okay? Because otherwise, you can't really make money in the markets, and that applies to any strategy out there. So my three-pronged trading approach is to understand the broad market structure, then you scan for technically sound stocks, commodities, currencies, what have you, and then you use the 1, 2, 3 reversal triggers as the triggers. You can, however, do a shortcut, and that's exactly what the indicator and scanner is for, okay? Now, what I'm going to offer you guys right now, and you have about, I think, you have about an hour and a half to purchase this if you'd like, is the Ultimate Candlestick Bootcamp, which includes the indicator and the scanner, and includes live, in addition to that, includes live bonus webinars that you guys attend so we can literally spoon feed your trade ideas. I'm going to teach you the low stress, high probability swing trading method, and you're going to learn how to nail these reversals by correctly reading investor sentiment and emotions using candlesticks and more. Usually we sell this for, I think, $497, and it includes a 30-page course guide. Right now, we're offering it today for the next, I think, 2 hours for $197. All you have to do is go to thestudytrader.com/better. And I'm going to show you guys more about the indicator and scatter in just a minute. Let me just kind of go through a couple things. I'm going to quickly see here into the chat box. Type this in. .com/better. Okay, so it's thestudytrader.com/better. I don't know. I hope you guys can see that. Actually, maybe it didn't go through. Let me just type it in one more time. Okay, and then we can go through all of your questions more. Entire audience. There you go. Okay, so important about all of this is that it also includes bonus webinars and, of course, the indicator and scan. I'll show you guys exactly what it works for. Okay, this is not a monthly fee, guys. This is a one-time payment. One time. There's no fee here. There's no recurring fee. It's a one-time payment. We do these bonus webinars. For the next few months, once a month or so, we're going to be doing live bonus webinars, live scanning webinars where we go through the market, and I literally spoon feed you trades and walk you through the system and walk you through the trades and show you exactly how this all works. And that's in addition to the course. Yeah, the course is permanent, does not go away. The course is, you have access to it forever. It doesn't go away, and you get to keep the indicator and scanners as well forever. It does not go away. I'm not taking it away from. There's no recurring fee here. Okay, so those are the bonus webinars. Who's the course not for? If you are trading for entertainment and you're basically gambling, this is not your thing. If you're serious about making money in the markets, that's the kind of people that we want. We don't want people in this who are not serious. Okay, if you're looking to actually find a high probability way of making money, like that I learned on Wall Street that I've been using for 21 years that really actually work, then yes, this is for you. This works for stocks, currencies, it works for futures, absolutely works for futures, and it absolutely works for options. I mean, if you can trade a stock, all you have to do is buy a put or a call for it, or a put spread or a call spread. It's very, very simple, and we'll walk you through that as well in the bonus webinars as well. Okay, so there's a ton of stuff you can learn in the course. You can learn everything you need to know about candlesticks and using candlesticks in conjunction with technical analysis. Okay, this is the way the pros trade. I know so because this is what I do, and this is what I learned at the pros desks. Okay, you're not going to have to learn hundreds of candlestick patterns. This is going to be the only thing you need to learn from a candlestick perspective. I promise you that. Now, a lot of people are asking me, what does it work? The indicator and scanner work. I'll tell you in just 1 second. It works for NinjaTrader, TradeStation, eSignal, and of course Thinkorswim. Okay. And I'll show you this in just 1 second. It also includes the rocket launch and the gravity pull. These are my super high probability setups. You can learn how to do multi-time frame analysis in confluence zones, all within the construct of using these candlesticks, and of course with the indicator. And a lot more stuff all about using technicals and candlesticks the real probability way, not some sort of, pie in the sky kind of business. All right, it's going to also teach you where to set your stops. We can show you a sound risk management strategy, the mental aspect of trading, and of course money management. And of course the beta reversal indicator and scanner is included as well. So let's talk about this. So the indicator and scanner works for Thinkorswim, eSignal, TradeStation, and NinjaTrader. And actually also works for TradingView.com, which is free. If you have TradingView.com, it's only the indicator that works, but there's a way to work around it so you can scan as well. So that's just, if you are using TradingView.com and you don't have any of these platforms, you can use TradingView.com for free. Once you purchase the package, of course, you need to get the indicator code. I'm going to personally get a phone call with you to show you how you can scan on TradingView.com using the indicator and get around it. Okay? So that's how that works. Now, let's see. So Peter, this is for you. These are the platforms it works for: Thinkorswim, eSignal, TradeStation, NinjaTrader, or like if you're in this case like you're with Schwab, it's TradingView.com, which is actually a platform that's not related to a broker, so it's actually free to use. The TradeTrader.coms are better. Now, let's go through more examples, because I know a lot of you guys are asking about the indicator and scanner. Let's go through this more. What other tickers do you guys want to look at? I'm just going to type in more tickers. And again, the way it works is really, really super straightforward. Let's look at, for example, let's see what other guys, like Microsoft. Okay, so that's a stock you guys all know. So all we need to do is we need to look at the scanner in the morning, and we see whether there's a valid buy signal or sell signal. Here, for example, is Microsoft. You see that buy signal here that just happened in early April? What happened to the stock since? It's gone higher, right? I just showed you guys a currency before, US dollar, Swiss franc. That's the one I like to trade. Okay, excellent. Sure, let's look at, let me, 1 second. Let me just look at, let's look at Intel, for example. A lot of guys are asking about Intel. You guys see this? Intel, who's asking for Intel? Yado and Brad and Michael. You guys, you see Intel? You see this sell signal here? Follow through selling 2 days later, and what has happened since? The stock is since lower almost 7%. Okay, it works intraday just as well. Okay, give me 1 sec. Does anyone want to see an intraday chart? Does anyone care about intraday trading? Anyone? Yeah? Okay, let me just quickly set up an intraday chart. 1 second. Give me just 1 second. Let me just set up an intraday chart. Okay, this is the intraday chart of the S&P 500 right here, right now. Okay, this white part of the chart is your day. What happened here? Buy a signal, follow through buying, and what happens? Repeat after me. What happens after this? Index goes higher. What happens down here? Buy signal, follow through buying, index goes higher. Okay, this is just a random. I just took the S&P. I can show you, a ton more stuff, but it works in any time frame. Because what we're doing, folks, is we're looking to take the other side of investor emotions. And so the indicator does not only look at candles. There's other stuff included in the indicator. It's an amalgamation of momentum, trend, and candlestick stuff. And candlestick stuff is actually very tricky to program for, believe it or not, because you need to. There's so many different parameters you can use for a candlestick. Okay, so a lot of people are asking about the exit strategy and all that stuff, guys. That's why I only have an hour here, so I don't have all day to explain this to you. That's what the course is for. Okay, to teach you exactly the entry, the exit points where you can take profits in any time frame. To teach you all the variations of this. To teach you the risk management, how to use it with different technical analysis, all that kind of stuff. It's all included in the course. The course is you get to keep it forever. It does not go away. We do the bonus live webinars where you get to come live, right? This the core is in the indicator and the course and the scanner. It's all included. Everything I've just talked about here today, that's all included for $197. It never goes away. You own it. You keep it. Okay. Cordelia is asking, is it okay to use in the UK? Yeah, you can use it in the UK markets. The scanner here scans for US stocks for the most part. But yeah, that's, you know, you absolutely can use it for that as well. The signals will show up on any chart. It doesn't really matter, you know, as long as you have the right platform for it. The bonus, the webinars, we don't do the webinars every single week or every single month. For the next few months, we can do them every month. And then we've been doing these webinars for years, so they never go away. We always do these webinars. It's for life, basically, for life of the product, for sure. Okay, excellent. Yeah, exactly. So let's look at more of the indicator and scan. Let me just go through this, because a lot of people are asking about that again, which is great. Okay. So 1 second, let me just get back to that here. All right, so how do we do this? Let's see. So let me just go through it again so you guys can see how this is broken up. Okay. So again, here's the watch list. So I come in the morning and I look for bullish or bearish reversals. That's it, right? There's 2 bullish varieties and 2 bearish varieties. I look for the top like 3 or 4 names. That's all I care for. That's what we do the bonus live sessions for. Okay. It scans whatever you want. It can scan the entire universe of stocks if you want, Charles. It scans whatever you want, but I usually have it scanned for the S&P 500 and I think the NASDAQ. But it scans whatever you want, you know. But I only like the most liquid, super, you know, liquid stocks. I don't like to trade stocks that are not liquid. And there's a reason for that, because that's, you know, a little bit more dangerous. Okay. So again, so I go in and, for example, does anyone want to, we just got a sell signal in the S&P 500, by the way. You guys want to see that one? On a daily chart. Here. This happened, what? On the 12th of June. You see this? You guys see this sell signal? Follow through selling the next day. So far, since that signal, and we took it, the S&P has dropped 1.2%. That's not a lot, but the markets are not very volatile right now. Okay, this is the daily chart, and it works intraday just as well. I showed you guys that before. Yeah, all you have to do is click on these and look if there's a setup. So Amazon.com has a valid sell setup, right? As does Google, by the way. I just told you that, right? You got that? So the last beautiful Amazon buy setup we had here, just after earnings, there was a beautiful buy, and it also gave us that signal. Okay. All right. How about Alibaba? Sure. Let's look at Alibaba. Here's Alibaba. Let me see. You guys can see this here. Bullish reversal. Follow through buying. Boom. Here we had a signal, but no follow through selling, so we ignore it. Right? How about here? Buy signal, but no follow through buying, so we ignore it. If you would have taken the signal in Alibaba, the way we have our exit parameters, you would have made at least 10 to 15%. Okay, you could have kept it longer, of course. And again, we teach you the sell signals, the risk management strategy, where to take profits, and all that stuff in the course as well. So let's go through the emotions of the what's included here a little bit more. Again, what you get with this is a course. You get to keep the course. You take the course over the next week or two, watch the videos, come back when we do the next live bonus session if you want, and we're going to go through and do live scanning with you. We do these scanning sessions, roughly speaking, once a month or so, going on a regular basis. Yeah. It includes the scanner and the indicator. Okay, so the scanner and indicator are included with this. And what does it work with? Let me just go through. The indicator and scanner works with the following platforms. Let me just go back to this. Hold on 1 second, guys. It works for Thinkorswim, TradeStation, eSignal, NinjaTrader, and TradingView.com. Right? Again, with TradingView.com, I say here it's only the indicator that works and not the scanner, but there's a hack around it, very simple, that I'm going to show you, and I'll personally get on the phone with you if you're a TradingView.com user so you can see how that works. Okay? No, you do not, Elvis, you do not have to combine the indicator with price structure. Absolutely not. All we do is, let me go through the process one more time for all you guys asking. And these are great questions, by the way. Okay? So all we do is we look for signals here. These are the signals. We see if, and we click on the ticker, in this case, Amazon.com. This is just the one here. And we get a sell signal. Okay? Now, what is follow-through buying and selling? I'm teaching you this in the course. That's what the course is for. I can't talk about it here and explain everything in an hour. However, it has to do that you need to see one more confirmation selling day for a sell signal or a confirmation buying day after a buy signal. That's what that means, okay? Al and Thomas and John and M, you guys are all asking that question, which is a great question. I'll teach it to you in the course. We go through it together live in live scanning sessions, okay? And excellent. I'm glad that makes sense to you guys. Kathy's asking, is the course video or the third page report or both? It's everything. Everything's included, Kathy. It's the indicator, it's the scanner, it's the course, it's the live sessions, okay? It's all included, and it's only $197. It's not a subscription service. It's a one-time fee. That's it. Yeah? Yes, you can use it on different platforms, Joe. Absolutely. You do not, if you have, say, Thinkorswim and like TradeStation or something, you don't have to buy it twice. You buy it once, and you get to use it on all your platforms. Is that good, Joe? Excellent. Excellent. Yeah, listen, guys. So what you're going to learn in the course is how all this works with all the different types of technical formations as well. So whether you're trading flag patterns or breakouts or Fibonacci retracements or moving averages, I'm going to teach you in the course how you use these candlesticks, this exact thing that I'm teaching you, that I'm talking about here today in the course. You come back, we do the live sessions, okay, once a month on average, and of course it includes the indicator and scanner, right? So for the indicator and scanner, let me show you one more time. All we do is we open up your charts in the morning. We look for things that are popping up on our radar. Maybe it's a bullish reversal, bearish reversal. In this case, we have Google, for example, just gave us a valid entry signal. Let me show you here. Okay, this is a valid entry signal. We have actually 2 sell signals already. This is a valid short setting up right now. Okay, you can use it on more than one computer. Absolutely, I don't care how you can use it on 3 computers for all I care. Okay, and again, does anyone want to see an intraday chart again? It works. I just showed you guys a day trading chart. Does anyone care about the intraday? You want to see it one more time? The course is a recorded course. It starts right away, okay? And the live webinars, they start in a few weeks. You're going to get an email when the next one starts, okay? Then it'll be the next one. So take the course now. You have 2 hours to purchase this, and then we're going to shut it down, okay? So let me just quickly go in here and show you the chart. I'll show you. Let's just go back and go, like before I showed you guys the S&P 500. You guys want to, let's look at the Russell 2000, for example, just to kind of mix it up so you guys can see that I'm not cherry picking. I am not cherry picking, okay? This is the Russell 2000, okay, just a couple days ago. You tell me what happened down here. What did the arrow print? A green up arrow, follow through buying, boom, off to the races. And again, it's not just a simple candlestick formation, this thing, guys. It's more than that. This took us 4 years to do. It's not that it's complicated what's in it. It's the combination of things that make up the algorithm, you know? It works for intraday, for currencies, for futures, for stocks. Listen, if it works in the Russell 2000 intraday on the IWM, it's going to work on the futures contract as well. Trust me. Okay, it works in any time frame, in any asset class. Okay, as long as there's a lot of liquidity. Excellent. All right, guys. Well, listen. Thank you for joining. We're gonna keep the offer up here one more time, and I think with that, let me just quickly go back. We're gonna pass it back to Jeanette. Wish you guys all a great rest of your weekend. Thanks for joining.